All right, mate. FTM, yeah, long-term macro view. Well, very, very strong chart. You can see the yearly. You know, the yearly's had the double year, then a breakup. Um, you have to think that you know, this can probably drop more. You would suggest, and maybe form a, a possible red yearly candle. Um, you know, but overall, this is a very strong sign. Normally you get a breakup like this and a close up here, like it is difficult to say if, you know, if this is having a red year, for example, it may be a two inside up pattern where you get a green candle up in the consolidation, a yearly consolidation, and then the next year you get a big breakup. Now I know that's not very good because the chance of having a red year. I mean, but you have to start looking at the 50% of this candle, right, somewhere there. If it gets down to that sort of area and anywhere below that, you have to start thinking that this is an amazing point to be buying, because at some point we're going to come back up and continue going higher. Now the big question is this going to be a red yearly candle? But you have to start looking at that 50% range. So if I even go to a 2-week chart now, um, you want to be accumulating. If we can continue to get some drops, well, down below this previous low, you can see where I drew that, and I don't think it's a coincidence that the 50% pullback of the yearly candle. Now I done it by eye, I didn't even measure it, but it was right on these lows. Right, so you can kind of see where the 50% retrace of the big move up, of the yearly move up was, and that held very well. But so a pierce below that 50% range, you would have to think that that is, you know, a very good place to be starting to pick it up, because on the yearly charts this looks like it wants to go a lot higher eventually. You could almost say that this looks like the Bitcoin chart. You know, you get a big move up, you get the drop back to 30,000 on Bitcoin, you bounce up, but this didn't take out the highs. Bitcoin slightly took out the highs, and then, you know, if this can drop back down and pierce, maybe I'm going too low here. You never know, but maybe it just wants to come down and take out these lows somewhere down here. So if it got back to $1, that's a 50% drop from here. You definitely have to think about that this area in here is very good. I mean, it's down to the previous highs. It's a 60% retrace. It's a pierce of these previous lows. It's a drop back into the high volume candle. Look at this high volume candle right here, right down in here. I mean, if price got to here, see this high volume, see the bottom of this high volume candle? If price got to that 60-cent level, which I don't know if it can do, but if it got there, you should buy it up with both hands, because this will act as massive resistance. This is almost also kind of breakout point where this candle broke out from this first pattern. So I would suggest, now it's a wide range, but down in here, down in that green box, if we start to get down on there, that's where I really like FTM.